Welcome back. You're watching Market Fatafat on ET now, and let's bring on board Arpit Beriwal to take us through the next half hour of trade and to talk about the stocks that are buzzing on technical front. And Arpit, let's talk about Bajaj Auto. How is this one looking on the charts to you now?
Very good afternoon, everyone. So, if you see overall auto index has been on a strong uptrend from past almost 12 months, and within that two-wheeler space, our top pick is Bajaj Auto. So, talking about technically, Bajaj Auto has been strong uptrend from past almost 8 months. It is the structure of higher lows is intact from past 8 months. On weekly scale, it is consolidating in between 8,750 to 9,000 zones for past almost 6 to 7 weeks. On daily scale, it is consolidating in the same range but holding well above its 50 DEMA. So overall, if you look at the setup wise, it is trading near its lifetime high, and auto index has been a strong driver within this space, strong sector. And looking at the overall mechanical indicators also, the RSI is trading above 65-70 levels, which clearly indicates the strength is there in the counter. So we can expect good momentum towards 9,350, 9,500 zones. So within auto pack, Bajaj Auto would be our top pick, with keeping stop loss of 8,750 for an upside move towards 9,350, then 9,500 zones.
9,500 levels also is what we could watch out for from Bajaj Auto. Let's move on, talk about Aarti Industries. Yesterday the board did meet, and now they have appointed Suyog Kotecha as the company's CEO. This is going to be with effect from 17th of June 2024, and he will be taking the place of Rajendra V. Gogri, who is giving up his role as the CEO of the company. So yes, from that on 17th June 2024 is what we'll be seeing Suyog joining in the company as the CEO. Also, they have appointed an additional director of the company as well. So keeping an eye out on Aarti Industries. And Suyog is coming in with a good background in terms of the exposure that he has in the chemical industry, and that is what is keeping the stock a bit chirped up in trade. And overall, I believe he's coming from the Reliance pack. So yes, we're keeping an eye out on Aarti Industries going forward. How his strategies there for the chemical business, what is he going to be doing? Because previously, like I said, Reliance Industries, before that he was a partner at McKinsey and Company, practicing on the chemical side. So yes, a lot of exposure that he's had to the industry. Keeping an eye out on it. 1% uptick for the industries.
All right, let's talk about Santech Realty then, and this particular counter is in focus on back of its earnings. The revenue actually has seen a spectacular jump on a year-on-year basis, coming at around 427 crore rupees as against 49 crore rupees. They reported a profit as against loss last year, so the profit came in at around 101 crore rupees versus the loss of about 28 crore rupees. Also, the margins also came in at around 35.9%. They've recommended a final dividend of about 1.5 rupees per share. Apart from that, they've approved the enabling resolution for raising of funds in one or more tranches, either by the way of QIP, FPO, ADR or GDRs, or even for the matter of fact, rights issue. So this is why this particular counter is in focus in trade today. Despite good numbers, the stock is under pressure.
Let's move on and talk about Praj Industries. This one too is in focus on the back of its numbers. Janay, how are the numbers looking like?
Well, yes, if you look at the revenues, it was marginally up 1.5%, which reported at 1,119 crores versus 1,004 crores on Y-on-Y basis. If you look at net profit, it came in at 92 crores this quarter versus 88 crores, which was marginally up around 5% on year-on-year basis. Now, operating performance is where the company has showed a good improvement. The EBITDA was about 20% uptick, which stood at 131 crores this quarter versus 108 crores last quarter during same period. And also the margin stood at 12.8% versus 10.8%, so seeing a good improvement here as well. If we talk about company's revenue from geographical, 78% of the business comes from domestic and 22% comes from export. And if you look at Q4 order backlog, the order backlog comes around 3,414 crores. So yes, that's the report on Praj Industries, and the company is trading good, about 4.8% with uptick on today's market.
All right, so that is all about the earnings, but we spoke to the management earlier on and asked them about their revenue target for 2030. Listening to what they had to say.
We believe we are on track, especially because of the unfolding opportunity that are emerging in the new spaces of CBG, of ETCA, of SAF. But also we believe that ethanol will get a very different push as we move forward through the year based on an application development for ethanol-based chemicals, for SAF demand for ethanol, for need for ultra-low carbon ethanol. We see very clearly a whole host of opportunities that are opening up, and Praj is extremely well poised. We are actually in a sweet spot to go and serve these opportunities and drive our growth forward. Our aim is to go to a 50% international and 50% domestic kind of a split between our revenues as we move through the next 5 years. And we are very confident that we'll be on that path. As you can see, over the last 4 quarters, our order book has started to change, and the last quarter saw almost 39% of our order book come from export orders.
Okay. Moving on from Praj Industries to a private bank, and Arpit, ICICI Bank is the stock that you've picked out for us. In terms of technicals, what is the level that one should be watching out for from ICICI Bank now, and where do you see it moving there?
Yeah. So talking about ICICI Bank, if we see overall within Bank Nifty space, Bank Nifty has been trading in almost in a broader range of 3,000 points between 47,000 to 50,000 from past couple of months. On weekly scale also, if we see mainly from the private space, ICICI Bank being the outperformer. So technically it is forming higher lows from past 6 months. On weekly scale, it has retested its previous breakout zone of 1111 levels and good recoveries from lower levels. Now if you look at the overall chart setup from a daily scale, it is trading near its major support zone, and definitely next week is the election outcome. So definitely we can see some momentum in the banking stocks, as we have relatively in the past couple of weeks we have seen underperformance. So technically wise also, the risk reward is quite favorable at current junction in ICICI Bank. So one can go long at current levels or minor dip towards 1120 with keeping stop loss 1080 for an upside move towards 1111.
Let's talk about Suven Pharma then, and that particular counter actually hit an over 2-month low on an intraday basis. The stock had fallen as much as about 4.8% last time I checked, and now it's down about 3.6% or so. The company reported approximately 57% fall in their net profit in the quarter gone by, which stood at around 53.4 crore rupees, while the revenue actually fell by about 31.5% on a year-on-year basis. The revenue growth was impacted by shipment delays caused by client-specific inventory as well as destocking. This is what the companies had given in their statement. The stock has fallen for a second consecutive session on back of its earnings.
Okay, let's move on to the next stock. And Arpit, you picked up Hipco because in the last 6 months just itself, it's moved from around 85 levels today at 272. What are you suggesting for Hipco? Should they just start booking the profits, because 200% uptick in 6 months is something that you rarely see?
So talking about Hipco, if you see overall from past 6 months, we have seen tremendous rally across mid-cap and small-cap stocks. And within that, Hipco, if you see technically the structure, we have seen stupendous rally from 90 odd levels to 270 levels. However, if we see the monthly structure, the trend is still very strong. On weekly trade, it has retested its previous breakout zone around 240, 245, 250 zones, and again recovery was seen from lower levels. So looking at the overall chart specific, if someone is holding from a positional view, 240 will be a major support. Till it holds about 240, one can go long at and one can continue to hold the stock. And from a fresh trade opportunity also, the setup is quite strong. On daily scale also, it has retested its previous breakout zone around 245, 250 levels. And we can see another uptick of 8 to 10% in coming session. So Hipco would be a preferred at current junction with keeping stop loss of 255 for an upside move towards 300 levels.
With the spotlight on the markets then, about half an hour ago when we started the show, the markets was just trying to make a recovery. But there you go, the recovery is a solid one at that, a 0.5% uptick coming in for the mid-cap index. And mid-cap index has actually recovered in excess of about 1.5% from the day's lowest point. Ditto coming in for small-cap index. You can see it at the bottom of the screen, 1.4% uptick from the day's low for the small-cap index. Even Nifty Bank has seen a very healthy up move. You have the contribution for the Nifty coming in from ICICI Bank, HDFC Bank, Reliance Industries. That's aided the benchmark, as well as the banking counters seeing an up move has aided. Even Nifty Bank recovery coming in of about 1% or so from the day's lowest points. A solid recovery underway, Vinny, and we still have 1.5 hours of trading session left.
Absolutely, still have 1.5 hour of trading session left. Surely important one to watch out for, because a lot of mid-cap names, whether you look at it in terms of NMDC, GM, or airports, policy, bazaar, all of them are seeing an uptick in the mid-cap. So yes, a sharp recovery that we are seeing in the markets. But on that note, we're going to slip into a very short break. Welcome back. You're watching Market Fatafat on ET now. We ended where we were saying the markets have seen a sharp recovery, but which other stock is buzzing in trade? Pala. That's the one we're keeping an eye out on. It's come out with its numbers. Jinay, what were the numbers looking like, and what is the stock doing right now?
A set of numbers versus estimations. If you look at revenue, it saw a downtick of around 24%, which came in at 82.5 crores this quarter versus 108 crores last quarter during same periods. If you talk about net profit, then it was down about 19%, reported at 23.6 crores versus 29.2 crores last quarter on Y-on-Y basis. If you talk about EBITDA margins, then it also saw a downtick, reported at 31% versus 37%, and EBITDA also saw a downtick of about 36%. So overall, a bad set of numbers, but the company did came out with a commentary where they said that the Q4 revenues were lower on sequential basis due to the festive sales that took place during Q3 FY 2024. And if you look at the overall performance, it also stayed subdued, and the company says that that was because of the lower consumer discretionary spending, and also there was some softness in the trade channels, which resulted to this subdued overall performance. And if you look at the stock is trading about down at 2.45%.
Alright, so that's all about La Opala. Let's talk about Bal Krishna Industries on the chart. Arpit, how does this one look to you?
If we talk about Bal Krishna Industries, so mainly the theme is the auto and the parallel industry within the auto space. So tire stock also has seen a very good rally in last couple of weeks. If we talk about Bal Krishna Industries, technically the stock has given a range breakout on monthly scale after 32 months, and it's a massive breakout above 2850 levels. On weekly scale, we have seen a sharp rally of almost 15% last week itself. But the good part is that it is holding at higher levels from past 8 sessions. So we have seen market weakness in last few days, but it is still holding above 3000 levels. So technically also we can expect good 8 to 10% upside move in Bal Krishna Industries from here on also. So Bal Krishna would be a preferred pick within tire space, holding at higher levels. So we can go long at current levels or minor dip towards 3080, 3100 zones, with keeping stop loss of 2950 for an upside move towards 3300 levels.
Okay, let's move on to the next stock, and we have Salar Technology, which is in focus after it reported its numbers. Overall, when you're looking at it, we're seeing a revenue increase of around 20.9% on a quarter-on-quarter basis. Other than that, when we're seeing in terms of the operational performance, seems like a bit of a weakness that's come in there. And that is why you're seeing the stock also seeing a bit of a fall. Down almost 2% is what the stock is trading at, but margins are down by around 240 basis points on a quarter-on-quarter basis. Other than that, the net profits of the company are seeing only a marginal uptick of 1%. So yes, on the back of that, we're keeping an eye out on Santech Tech. Doesn't seem like a great set of numbers for the company.
Alright, let's talk about Gujarat Alkalies then. Jinay, why is this one in focus?
Reported a mixed set of numbers actually. If you look at the revenues, it stood at 1002 crores versus 921 crores, which is an uptick of about 9% on quarter-on-quarter basis. The company reported a loss of 46 crores this quarter versus a profit of 71 crores on quarter-on-quarter basis. Now, if you look at operating performance, then EBITDA was up around 661% on Q&Q basis, stood at 29 crores versus 4 crores on quarter-on-quarter basis, and the margins also an uptick, which stood at 2.9% this quarter versus 0.4% last quarter. Now the company has recommended a final dividend of rupees 13.85 per share. So a pretty mixed set of numbers. The stock was trading down earlier 2%. Now it seems it's recovered quite a bit.
Alright, let's talk about Dixon Tech then. Arpit, how is this one looking on the charts to you now?
Yeah, so talking about Dixon Technologies, this has been one of our favorite pick within the mid-cap space. So if you see overall the structure from technical perspective, almost from past 12 months, it is forming higher lows that clearly indicates that every dip is in bought into. From almost 3.5, 4,000 levels, we've seen a rally towards 9,000 levels. On weekly scale also, it has given a range breakout above 9,000 levels. and holding well above it on higher zones. On daily scale, it is holding well above the short-term moving averages, and we have seen some cool off in mid-cap stocks in last week, but this stock is holding well at higher levels, trading near lifetime high, and definitely we can expect 5-digit figure going forward in couple of weeks. So Dixon Tech would be a preferred pick. One can go long at current levels near 9,300 levels, with keeping stop loss of 9,000 for an upside move towards 9,750 and then 10,000 plus zones.
Alright, let's talk about Snowman Logistics then, and that particular counter is in focus on back of its earnings. At one point in time, the stock fell as much as 4%, taking the stock to the lowest level since mid-March. From there on, it's tried to make some recovery, but still lower by about 3% or so. Their Q4 profit actually, Snowman Logistics Q4 profit actually fell by about 58% on a year-on-year basis. The revenue, however, was higher by about 13%, but the expenses actually outpaced that revenue growth as well. So on back of weak set of numbers, Snowman Logistics down about 3%.
Let's move on to the next stock. At number 26 is Bharat Electronics. And Arpit, do you think BL will continue to see the run-up that they've seen in the last 6 months, almost up 102%? So what's the view on this now?
Well, from a defense-based perspective, this has been a preferred pick. As rightly said, that we have seen a sharp rally in last 6 months itself from 150 to 300 levels. But as of now, on the technical perspective, as of now, there is no major sign of reversal on the bigger time frame chart on monthly scale. On monthly scale, the structure is intact with higher lows. On weekly scale, the base of the stock is shifting higher. So from 220, it has shifted to 245, 250 zones, from 250 to 275. The new base for the stock is around 275, 280 is a major support zone. And till it holds above 275 levels, we can expect good another 6 to 8% upside move from current zones on minor dip towards 290 levels. So BL would be a preferred pick, can buy in between 290 to 294 zones with keeping stop loss of 278 for an upside move towards 305 levels.
Alright, let's talk about Dishman Carbogen then. Jinay, why is this one in focus?
The Dishman Carbogen is in focus on behalf of earnings. If you look at the revenues, it saw an uptake of around 6% coming in at 655 crores this quarter versus 618 crores last quarter during same period. But if you look at the bottom line, it remains same coming in at 70 crores this quarter versus 70 crores last quarter as well. Now the company has given overview about its business on overall geographicals, where it says that the France business is now operationally stable and it seems that there is a strong pipeline going ahead. If we talk about the UK business, the company says that the UK business should get to normal as their cosmetic customer is now committed for this year. If you talk about the Netherlands business, the company says the company is taking a big effort to bring down their COGS. And if you talk about the Indian business, the company says the robust customer order books is expected from this year's and incoming years ahead, especially in their creams business. So this is the counter you need to watch out for. And if you look at the company, the stock is trading about 13% lower.
Right, let's move on to the next stock, and that is Ganesh Benzo. This stock also is in focus on the back of its earnings. When you look at it, we're seeing a decline in terms of the profits of the company, down 3.5%. Margins have seen a sharp contraction of around 300 basis points. Revenues, a slight bit of an uptick of 9% is what we could see. But other than that, operationally also seems like a weak performance that's coming from Ganesh Benzo. And because of the decline in terms of the profitability as well as operationally weak performance, we're seeing the stock is down almost 6 to 7% in trading at the day's lowest point as of now.
Alright, let's talk about NHPC then. Arpit, on the charts, how is NHPC looking to you? Because this one has had a good run, isn't it?
Yeah, so talking about NHPC, if we see the power and overall power stocks have seen a very good sharp rally across the past time frame. So from a technical perspective, the stock is quite strong on monthly scale. If you see on the weekly setup, it has given a range breakout above 98 levels after almost 12 to 12 weeks. On daily scale, the structure is higher highs, higher lows, and in spite of market choppiness, the good part is that it is holding at higher levels with strong gains above 100 levels. So I think slowly, steadily, we can expect a good move towards 110, 150 levels. So we are quite bullish on the setup technically. So NHPC would be a preferred pick. One can go long at current levels with keeping stop loss of 97 for an upside move towards 110 and then 115 zones.
110, 115 zone is what we could expect NHPC to move to. Let's move on to the next stock, and we have Royal Orchid that is in focus today after it missed the street estimate in terms of its Q4 results, and that is why we're seeing a downtick of almost 6% for the stock. When you look at it in terms of the details of the numbers, how they're shaping up right now, revenues seeing a just slight bit of an uptick of around 5%, 76 crores is what the revenues stood at. Operationally a weak performance, so margins have seen a contraction of 600 basis points. 23.3% is what the margin has come in at versus just 30.1%. And other than that, even in terms of the EBITDA performance, that's down almost 18%. So yes, clear pressure that we've seen on the stock after its weak set of numbers because of the miss in terms of the margins as well as missing the street estimate.
All right, so that is all about Royal Orchid for you. But on that note, thank you so much, Arpit, as well as Jinay, for joining us on the show and taking our viewers through all the stocks that are moving in trade today. But let's talk about the F&O strategy that one should have in just ahead of that big verdict coming in. Just let's hear out the experts on that front.
Intraday, if I have to go with the direction, that I'll go with the negative side. With the view that market is forming the lower highs, lower lows from last 3-4 days and trend is turning lower. So I'll go with 22,300 put. However, one need to keep in mind that decay may happen fast if you carry the position overnight. But I want to play with the trend setup, which is slightly negative now. So I'll go with 22,300 put, which is now near 275 levels. I'll buy this put near 222.30 with the view that once it can hit towards 350 marks.
I would really think that it's better to wait and let the VIX drop because I wouldn't want to fight the volatility game when we are really trying to take a directional view. So it is better to really let that happen and then take a directional view post the event is how I'm thinking about it.
You could find margin of safety in BFSI, given that earnings growth has been pretty strong. You could find margin of safety even in the technology pack if earnings recovery were to come in the second half of this year. But there could be a significant margin of safety in public sector units, given the growth trajectory on many of these monopolistic sectors like power, logistics, oil marketing companies, commodities. You could see distinct value being, trading at single-digit P multiples.
The sector leadership, in my opinion, will continue to be capital goods, infrastructure, defense, and those kind of names, as opposed to the other parts. The other parts, of course, we would do cherry picking with regards to where valuations are favorable, and if there is a turn of fundamentals, whether it is IT, whether it is FMCG, and whatnot. But directionally speaking, over the next 4 or 5 years, the sector leadership is likely to be infra, capital goods and whatnot, capital goods and construction, as long as there is policy continuity on the top, which is what's the basis assumption in all of this.
When the private sector came in the 80s, so wherever the private sector is given a free hand without interference, we have become globally competitive on our own. So defense is something we just started 3 years ago, 5 years ago, where the private sector was opened up. So the runway can be huge. Our total defense manufacturing is less than $15 billion today. The world market is $2.2 trillion. So that runway can be huge. So there are some pockets like that. Premium consumption, if the population demographics works the way it is, for the next 20 years, you'll have some items which will continue to grow fast.
Okay, those were the views coming in even from the CIOs. But let's wind down this edition of Market Fatafat on ET now. And the markets have again given up those gains and the recovery we saw a short while ago. So keep an eye out on the market. Closing trade will take the action forward.
If you like this video, then like, share and subscribe to ET Now.